Everybody, today we're going to talk about the difference between your traditional bank, your RBC, your CIBC and whatnot, and virtual banks that a lot of you know, but there's many other virtual banks that you probably never heard about, like for example MCAP, First National, Paradigm Quest, Home Trust. So a lot of these banks have advantages that you guys are not aware about. So for example, if you take an adjustable rate mortgage, what you call your variable mortgage, with a traditional bank, if you get a rate of, let's say, prime minus 50 basis points, which it's 2.5 today, and let's say, for example, after 2 years or so, within your 5-year term, you decide to convert your rate to a fixed term because you think that rates will go up, or rates have started to go up. Well, there's no guarantee that bank will give you what we call the reduced rate, a good rate actually, because your traditional bank have posted rates. So what you see at 5% today, or for a 5-year locked-in rate, and also reduced rate, which they give to preferred clients. So they'll give you a rate between that, but there's no guarantee in your contract that they'll give you the preferred rate. But for a virtual lender, their posted rate and their preferred rate are the same. So whatever they give their brokers to sell is exactly what you're going to have at the time of conversion. Also, what we need to understand is the origination of these funds all come from almost the same place. MCAP, for instance, get their funds from the Caisse de dépôt, which we all know very well. Paradigm, a lot of it comes from RBC. So you have to think about that a bank doesn't lend you their own money. They buy funds on the market, which we call the cost of funds, added on to the spread. So a lot of questions also that you guys had for me is what happens if the company goes bankrupt? Well, I'll give you one perfect example of what happened with ING Direct last year. I don't know if a lot of you recall, but ING got bought from Scotiabank and they changed the name to Tangerine. And this is one perfect example of somebody buying up the books. And ING wasn't doing very, very well, and they're still existent in Europe. And in Canada, they switched names and they switched the hands to Scotiabank, and they continued the operations under the name of Tangerine. A lot of you got the mortgage through ING, but it continued. And also, a lot of my clients specifically have mortgage with First Line. First Line got bought off with CIBC, and that continued also. So there's no danger whatsoever for you guys to take a loan with a virtual lender, because their books will always be sold to somebody else if something happened, and they have to stick with the contract that you guys signed at the notary. So the contract, the deed of loan, has to be respected for the term of your loan. And I hope that concludes today's little short video about the difference between a virtual lender and traditional lender. If you guys have any questions, feel free to call me. Thank you very much and happy holidays.